Welcome to Singapore Property Talk Law, the show where we dig deep into the stories that are shaking up Singapore's property scene. Today, we're diving into a story that's making headlines, a family feud that's erupted at City Developments Limited, better known as CDL. I'm Damien, your host for this deep dive.
And I'm Serene, joining you to unpack this drama that's unfolding at one of Singapore's property giants.
You hear about family businesses having their disagreements, but this situation at CDL has gone from a simmering tension to a full-blown public showdown.
It's definitely got everyone talking, and for good reason. We're not just talking about any family here. We're talking about the Kweks, a name synonymous with Singapore's property landscape.
Right. We're talking to billionaire Kwek Leng Beng, the patriarch who built CDL into the global player it is today, versus his own son, Sherman Kwek, the current CEO.
It's important to remember that CDL wasn't always a giant. When Kwek Leng Beng took over in 1971, it was a struggling company. But under his leadership, they grew into this massive developer with projects spanning the globe. You can't talk about Singapore property without mentioning CDL, so to see this kind of conflict erupt at the top is pretty extraordinary.
Okay, so we've got the background. But how did we get to this point? What triggered this very public family feud?
Well, the seeds of this conflict seem to have been sown on Chinese New Year Eve. Imagine family gatherings and reunion dinners happening all across Singapore, and then bam! CDL's corporate secretary sends an email to the board about 2 new independent directors being nominated.
Talk about awkward timing. Who were these nominees, and who was behind their nominations?
The nominees were Jennifer Duong Yang and Wang Xiyan, and the driving force behind their nominations seemed to be a faction on the board aligned with Sherman Kwek, specifically board members Philip Lee and Wang Ai.
So essentially, a move by the son and his allies to reshape the board.
Mm-hmm.
I'm guessing Kwek Leng Beng wasn't thrilled about this.
Not at all. The very next day, Kwek Leng Beng sent an email questioning the urgency of these appointments, and crucially the fact that they completely bypassed the nominating committee, which is standard practice for vetting new directors.
Ah, the nominating committee. That's the group responsible for thoroughly evaluating potential board members, ensuring they have the right experience and expertise, and that there are no conflicts of interest. Bypassing them raises some serious corporate governance red flags.
Exactly. It seems like a pretty bold move, especially given that CDL even received legal advice warning them against it.
But they went ahead anyway.
Yes, despite the warnings. The board approved the appointments on February 7th. With the votes seemingly confirming a pre-planned move by Sherman Lee and Wang, it was a clear signal that they had the numbers to push this through, even against the wishes of the chairman. Kwek Leng Beng.
So essentially a power play. This sounds like it was planned for a while.
It's starting to look that way.
So how did Kwek Leng Beng respond to this? Did he just accept this boardroom coup?
Not a chance. He immediately fired back with an email on February 8th demanding Sherman's removal as CEO.
Wow, he didn't hold back. What were his reasons for wanting Sherman out?
Well, Kwek Leng Beng cited the disregard for corporate governance as a major issue. But he also pointed to what he called Sherman's past missteps. That had put CDL in a precarious position.
What exactly were these missteps he was referring to?
He specifically mentioned the Sincere Property Group debacle in 2020, where CDL took a $1.9 billion hit due to a failed investment. He also brought up some questionable investments in the UK property market that resulted in losses for CDL. And finally, he highlighted the underperformance of CDL's share price since Sherman took over as CEO in 2018.
Okay, so Kwek Leng Beng is basically saying, my son's judgment has cost us money and damaged our reputation. He's not fit to lead. This is serious stuff.
It is, and he's framing this whole director appointment situation as an attempt by Sherman to consolidate power and sideline him, the chairman. He even used the term attempted coup, so you know he's not messing around.
So Kwek Leng Beng wants Sherman out. But with Sherman's allies now in control of the board, that's not going to be easy.
Exactly. By February 9th, the restructured board, now led by Philip Lee, officially rejected Kwek Leng Beng's attempt to oust Sherman, and that's when things really exploded into the public sphere.
Right. On February 26th, CDL called for a trading halt on their shares and even canceled their scheduled results briefing. It was like the property world in Singapore came to a standstill.
The news cycle was dominated by this family drama. Kwek Kwek Leng Beng went public with his accusations, releasing statements outlining his concerns about Sherman's leadership and this perceived boardroom takeover.
And of course, Sherman wasn't just going to sit there and take it. He issued his own statements defending his actions.
That's right. Sherman's counterargument is that his actions were aimed at improving CDL's governance, not undermining it. He claims that his father's accusations are baseless, and that his focus is on ensuring robust decision-making at the board level. He's painting this as him trying to modernize the company, while his father is clinging to outdated practices.
So a classic he said, she said situation. But it seems like more than just a clash of personalities. There are deeper issues at play here.
Definitely. This isn't just about who's right or wrong. It's a clash of visions for the future of CDL. You've got Kwek Leng Beng, the patriarch who built CDL from the ground up, relying on his experience and intuition. And then you've got Sherman, who's likely seen how other global companies operate and wants to bring in more structured, perhaps more westernized, corporate governance practices.
It's fascinating, isn't it? Because there are valid points on both sides. On one hand, you have the experience of Kwek Leng Beng, who's guided CDL through decades of growth and weathered countless storms in the property market. On the other hand, you can understand Sherman's desire to modernize and adapt to the evolving landscape of global business.
And this difference in approach isn't just theoretical, it's playing out in real time with real consequences. Think about that sincere property group investment that Kwek Leng Beng brought up. It was a massive bet on the Chinese property market, and it backfired spectacularly. Now, was that an example of Sherman's recklessness, as his father claims? Or was it a calculated risk that simply didn't pan out, as Sherman might argue?
That's a great point. It highlights how differently they might view risk and decision-making. Kwek Leng Beng, having built his success over decades, might be more cautious and wary of big bets, especially in volatile markets. Sherman, on the other hand, might be more comfortable with aggressive expansion, even if it comes with higher risks.
And it's not just about individual investments, it's about their overall strategies for CDL's future. Kwek Leng Beng, with his deep roots in Singapore, might prioritize a more localized approach, focusing on the Singaporean and regional markets. That he understands so well. Sherman, with his global outlook, might be pushing for more international diversification, venturing into new markets and asset classes.
And it makes you wonder, if part of this tension stems from how they view the legacy of CDL, is it Kwek Leng Beng's company, built in his image? Or is it a company that needs to evolve and adapt for a new generation of leadership?
It's almost Shakespearean, isn't it? The aging king trying to hold on to power, while the ambitious prince seeks to claim his birthright. And caught in the middle are the investors, the employees, and the entire Singapore property market, watching with bated breath to see how this drama unfolds.
Speaking of watching, this whole situation has definitely attracted attention beyond just the business pages. It's become a public spectacle,
Right.
with everyone trying to decipher what's really going on.
And it's not just about the gossip, it's about the very real impact this is having on CDL.
Right, like the share price. With the trading halt, investors are in limbo, unable to buy or sell CDL shares. That's a lot of uncertainty hanging over their heads.
And then there are the employees. Imagine working at CDL right now, with this family feud playing out in the headlines.
It must be incredibly unsettling, not knowing who's in charge or what direction the company is heading in. It's like their workplace is turned into a soap opera.
And let's not forget about the damage to CDL's reputation. This very public airing of dirty laundry can erode trust and make potential partners or investors think twice about doing business with them.
It's a high price to pay for a family disagreement.
Absolutely. And it raises the question, is there any hope for resolution? Or are they headed for a messy and protracted legal battle?
Well, one voice calling for calm amidst this storm is David Gerald, the president of the Securities Investors Association of Singapore, or SIS for short.
SIS is a well-respected organization that advocates for the interests of investors, so their perspective carries a lot of weight. Gerald has publicly expressed his hope for an amicable resolution to this conflict, one that benefits all stakeholders in CDL.
That sounds pretty diplomatic, but it's interesting, because Sherman Kwek was actually appointed a patron of SIS just last year, in August 2024.
That adds another layer to this whole thing, doesn't it? Makes you wonder about the behind-the-scenes dynamics and potential influence.
It definitely raises some eyebrows, but
Yeah.
regardless of what's happening behind closed doors, it's clear that this saga has far-reaching implications. This CDL saga really highlights the complexities of family businesses, especially when they reach a certain size and influence.
It's like a microcosm of those classic tales of family dynasties, where ambition, loyalty, and legacy all collide. The stakes are incredibly high, not just for the family members involved, but for the entire company and its stakeholders.
It makes you think about the challenges of succession planning in family-run businesses.
Yeah.
How do you ensure a smooth transition of power while balancing the founder's vision with the need for fresh perspectives and new leadership?
It's a delicate balancing act. And as we can see in the CDL case, it can go wrong in a very public and damaging way. Ideally, succession planning is a gradual process with open communication and a shared vision for the future. But when you have a clash of personalities, a difference in business philosophies, and perhaps even a struggle for control, that careful planning can go out the window.
And in the case of CDL, it's not just a family business, it's a publicly listed company.
Mm.
So you have the added layer of shareholder interests.
And regulatory scrutiny.
Absolutely. Every decision, every statement is being analyzed not just by the family members, but by investors, analysts,
Yeah.
and the media. It's a pressure cooker situation.
So what are the potential outcomes here? Where could this all lead?
Well, one possibility is that they manage to reach some kind of negotiated settlement, perhaps with mediation, or through the intervention of a respected third party. This could involve a compromise on both sides, maybe a restructuring of the board, or a clearer definition of roles and responsibilities. That would probably be the best outcome for CDL, wouldn't it? A way to move forward without further damage and instability.
Yes, but it would require a willingness to compromise and put the interests of the company above personal grievances. It's easier said than done, especially when emotions are running high.
What if they can't reach an agreement?
Then you're looking at a potentially protracted and costly legal battle, which could further erode shareholder value and distract from the core business of running a property empire. It could even lead to a split in the company, with different factions controlling different parts of the CDL portfolio.
It sounds like a messy scenario, one that no one really wins.
Exactly. And it's a reminder that even in a place like Singapore, known for its stability and strong corporate governance, these kinds of conflicts can happen. Family dynamics and power struggles can disrupt even the most successful businesses.
It's a cautionary tale, isn't it? A reminder that clear communication, thoughtful succession planning, and a shared vision are crucial, especially for family-run businesses.
And it's a story that's still unfolding. We'll have to wait and see how this drama plays out in the weeks and months ahead. But one thing's for sure. It's a story that has captivated the attention of the entire property world in Singapore and beyond.
Well, this has been quite the deep dive into the CDL saga. It's a story with many layers, and it raises important questions about family dynamics, corporate governance, and the future of one of Singapore's most prominent companies.
It's a reminder that even behind the gleaming facades of Singapore's skyscrapers, there are human stories, conflicts, and dramas playing out, shaping the landscape of the city we know.
For Singapore Property Talk Law, this is Damien signing off.
And I'm Serene. Until next time, stay informed, stay curious, and keep an eye on those property headlines.